Today, we're going to introduce you to what we call the parties to the actual contract itself. As you know, in a contract, there's always the offer, acceptance, and consideration. So when you are writing a life insurance policy, an application rather, you're basically offering the insurance company the opportunity to insure you. So there's that offer, so to speak. Then the insurance company has the right to basically accept the risk or deny the risk, basically. So you've got an offer and an acceptance situation. And then the third part of this, of course, is consideration. In other words, there has to be some kind of remuneration. So in our business, of course, it's a premium the client is paying. If any one of those things is missing, then we don't have a contract. So you have to have those three conditions. Basically, there's an offer, there is there's the acceptance part of it, and of course there is the consideration on that. So given all that, let's assume now we do have in fact a contract. Everything is done, we have a contract. So what happens now? The three parties to the contract are the insurer, and the insurer is basically the insurance company. In other words, the issuing organization or issuing company, whatever it is, okay, is the insurer. So by default, obviously, every single insurance policy out there has an insurance company backing it. So that's the insurer. So by default, the insurer is there all the time. Okay, where the difference lies is in the next two parts. Okay. The question now is the insured, okay? The insured, another name for the insured is the contract holder or the policy owner. In other words, the insured is the individual or organization, corporation, whatever it is, if it's corporate owned, that actually makes the deal with the insurance company, with the insurer. So all rights and privileges always lie with the insured, okay? So the insurer controls all of this. They are the legal owners of this contract. They are the ones that can speak on behalf of that contract. They are the ones that can change the beneficiary. They are the ones that can cancel the policy. They are the ones that can do basically anything. In other words, the insured has all the marbles, you might say, stacked up on their side. And without that insured, nothing can happen, basically. So that individual is really that contract holder. They own that $500,000 life insurance policies. The life insured, of course, is the body that we're actually insuring. Okay, the individual that we're actually insuring is what we refer to as the life insured. Now, the life insured really has no rights because all the rights lie with the insured. So, fiduciary responsibility for you as a client, as the agent, let's say, your responsibility is not to the life insured. Your responsibility, your fiduciary responsibility, lies with the insured because it's the insured who's actually making the deal. The life insured simply says, yes, I agree to have my life insured, so they sign off on it, and we leave it at that. But where's the power in all of this? The power in all of this always lies with the insured. Okay, so we get into two different possible scenarios. Okay, if 2 and 3 are the same, in other words, the insured and the life insured, then it is what we refer to as personal insurance. So if I buy a policy on my life, I am both the insured and the life insured. But once again, if asked on the exam, where's the power lie? It's still, even though it's a personal insurance policy, the answer is always the insured. Okay, it's always the insured because the insured is the one that has all the power. So on a personal insurance policy, okay, if 2 and 3 are the same, it would be basically you're buying an insurance policy on yourself, but the fiduciary responsibility, again, lies with the insured. Okay. If 2 and 3 are different organizations, different companies or different people or whatever it is, then it's what they call third-party insurance. So if, for example, I buy a policy on your life, I am the insured, you are the life insured. Okay, that's how it works. And then, of course, the beneficiary will be back to me or somebody else. If you notice that the beneficiary is not on here, because the beneficiary doesn't have any right. Okay, so in this case here, the beneficiary has no rights. So the parties to the contract are basically the insurer, the insurance company, the insured, and the life insured. And if the number 2 and 3 are separate entities, then it's what they refer to as third-party insurance. So key man insurance, key person insurance, for example, where the corporation is buying a policy on a key individual, that's third-party insurance. Group insurance. That's another one. Group insurance is a third-party contract because the insured really is the sponsor of the group plan. You, as an employee, are simply the group person insured or the group life insured, and that's it. So all the rights always, regardless of how you look at it, all the rights are always with the insured, basically. So you must know the distinction between personal insurance and third-party insurance. When you're dealing with business, it's generally speaking, third-party insurance is the usual way of setting all these things up. Okay, so at the end of the day, as I said, all of the rights here, okay, always lie with the insured, and the reason for that, once again, is because it is a unilateral contract. So as a unilateral contract, the only person that in fact can make any kind of changes to this policy, increase it, decrease it, cancel it, stop payments, whatever those are really the insured, not even the life insured, okay, can do this. So for example, if I own an insurance policy on my spouse, and so she's the life insured and I am the insured, and I'm the beneficiary, let's say, and then we get divorced, and she phones the life insurance company and says, I want to cancel the life insurance policy. The insurance company can't do that because the life insured doesn't really have any power. Okay, it all comes to the insured. So they have to notify me and then decide whether I want to cancel a policy or whether I don't want to cancel a policy, you see. So all of it is because as long as the premium payments are being made, then it is a unilateral contract. And because it's unilateral, not a bilateral contract, but it's a negotiated contract, it's a unilateral contract. In other words, it's a one-way contract. Basically, one way points at me. And so I have all the rights in the contract, and then I will decide whether, in fact, I will cancel it, increase, decrease, whatever those options may be. Okay, so these are basically the issues when it comes to the parties to the contract. So I draw your attention to the fact that if you notice that the beneficiary designation is not there because they do not form part of the contract. And at the same time, the payor, the premium, is also not part of the contract. Okay, whoever's paying the premium could be a entirely different person altogether, and it doesn't even have to be any of these people. It could be a different person altogether. So the payor is not in, the life insured is not in. It's a party to the contract, and basically the insured. And if these two creatures are the same, it's still the insured. And if it's separate, it's third-party insurance. It's still the insured. So it is important that you recognize the importance of why the unilateral contract is so important in all of this. And we'll leave it there.